Hey everybody, Jonathan Rose here. Today, I just want to do some options one-on-one. Everyone seems to make options so complicated. It doesn't have to be like that. So in front of you, I'm using Thinkorswim. We're going to look at Roku. So all I did in my layout here, tick down, I customized it because I really just wanted to look at delta and theta for right now. Okay? So Roku, the underline's trading 33.15. Bid ask 33.13 bid at 33.16 ask. So 33.15, that's going to mean the at the money strike is going to be 33. What Thinkorswim does is in the money is all purple and out of the money is going to be all black. And same thing on the put side. How we simplify options, how you should look at options is, let's look at this 34 strike. Now, this 34 strike, it's 55 bid. Someone's trying to buy it for 55. Somebody's trying to sell it for 85 cents. Now, that's a really wide market. That's 30 cents in between the bid and the ask. If I was looking to buy Roku, and I was 60-cent bid, the market would then be 60-cent bid at 85 cents. And that would be good anywhere Roku is traded because options have what's called the national best bid and offer. So even if I just did 60-cent bid on the Chicago Board Options Exchange, which is one exchange out of 12 or 13, the other exchanges still have to honor that 60-cent bid because of what's called the national best bid and offer. Now, 60-cent bid, let's say I get filled. If I got filled and if I bought 10 of them, I would have $600 of risk. The great thing about buying options is you can never lose more than you invest. So my ultimate risk is going to be $600 for 7 days because these options expire within 7 days. Now, stock's at 33.15. If it expired at 33.15, buying the 34s, I would lose 100% of whatever I invested because these are out of the money. How I teach, how I want you to look at options is if I buy 10 of these for 60 cents, just think of it like you're long 1,000 shares. Jonathan, the stock's at 33.16. Why would we want to be long 1,000 shares at 34? Well, we get massive leverage to do that, right? It's going to cost us $600 if we buy 10 to get long 1,000 shares at 34. If this underlying price doesn't get above 34 within 7 days, we lose 100% of principal. If it does trade above 34, if it closes at 35, we're long 1,000 shares from 34. It's going to be worth $1 because it's stock. At expiration, these will turn into stock as long as they're in the money. The options rule from the Options Security Council is if your option is 1 penny in the money, so if the underlying closes at $34.01 next Friday, you're automatically going to be exercised, which means you're automatically going to be long 1,000 shares. The exchange or your broker is going to assume that if you're 1 penny in the money, you're going to want to be long stock. It's a safe assumption, right? The same assumption is if the stock expires at $33.95, you're not going to want to be long 1,000 shares. So these are worthless. You're not going to have any position. The biggest breakthrough that I see with option traders is looking at their position like they're long 1,000 shares from 34. So if the stock rallies above 34, 35, 36, 37, instead of covering your options, which we really don't want to trade these with stops because it's a 30-cent wide market. It's not a very great tradable market. But what you can do if the stock rallies, if the underlying stock rallies to 36, 37, you can sell some underlying shares. Look, it's a 3-cent wide market compared to a 30-cent wide market. So if we're long 10 of these, stock goes to 36 and we sell 500 underlying shares, you're still long 10 calls and now you're short 500 shares. At expiration, you're long 1,000, short 500, you're going to be long 500 shares. You're going to need to cover 5 more options or sell 500 shares. Now, let's touch on the Greeks a little bit because many people get really confused about Greeks, and this is a great way to simplify. Delta. Look at delta as the probability that the option ends up in the money. If we say it in a different way, if I buy 10 of these for 60 cents, the market is pricing that there's a 39% chance that Roku trades over 34 within 7 days. If we look up here at the 36 halves, there's a 14% likelihood. Look at delta as the percentage that an option can be in the money or not in the money. Finally, theta is just time. Right now, the market is pricing 55 cents at 85 cents on the 34 strike. If there was 1 minute until expiration, if we were next Friday and there's only 1 minute until expiration and the stock's at 33.13, these are worth 0, right? The market's going to price in a 0 probability of Roku getting up that much in 1 minute or 1 second. Over 7 days, these options are going to go lower by 6 cents. That's the amount of theta that the option will lose per day going into expiration. This will accelerate as we get closer and closer to expiration. So if we go down the options chain and look at something further out, you'll see the theta is going to be lower. Lower as a percentage of the overall price. It's both 4 cents, but again, it's going to lose 4 cents, but they're worth, $1.85 mid-market rather than with only 7 days to go. You can see the risk in short-term options because it's going to lose 6 cents or about 10% of the value just from the close today to tomorrow, which is Saturday, but options will continue to decay over the weekend. That's why most Friday afternoons you're going to see the VIX go lower because there's no reason to keep long options over the weekend unless you really, really love that position and you're in a longer term trade. Most seasoned option traders aren't going to buy options in the last hour of Friday in order to get out the first hour of Monday because you're holding that theta over the weekend. You're holding that risk over the weekend. So you only want to do that if you're speculating, if you want to make a guess on direction. I don't do that much. I like to trade volatility more, but here's a good overview for you. We went over the call side, practice the same thing we just did, but do it on the put side. I hope that helps. If you have any questions at all, email support@activedaytrader. My name's Jonathan Rose. I'm happy to help. Thanks, guys. Enjoy the weekend.